right, good morning, good afternoon, good evening, everybody. Today is Wednesday, October 21st, 2015. It's 12:04 Eastern Time. My name is Jerry Furst, founder and director of Investors Education Network, Traders Education Network, broadcasting to you live here on CapitalDiscussions.com. And welcome to the new Beginners Trading Group. And we're getting a little bit of a interesting start, and we're into earnings season, and this is week 3 for the group for beginners. So we'll get a little bit of business out of the way. Briefly, disclaimer, none of this broadcasting should be considered as an investment advice or recommendation to trade, strictly for educational purposes. Be an adult if you do decide to put your toes, let alone your legs and arms, into the market. Otherwise, you could have your head ripped off, or maybe just your face. All right, and so only trade with money you can afford to lose, and please do your due diligence when purchasing any products or services. So here on the beginners group, basically the foundations of trading, and especially then we get into trading with options here on Capital Discussions, and that's primarily what I personally invest and trade with, is options. The basics is that you can do a day trade. You can do a swing trade, which I define as 1 to 4 weeks. You can do a investment type long-term hold and trade around the position, such as buying a leap, or you could even buy the stock. There's 2 things that I'm thinking of doing today. Either talking about earnings announcements, and we can look at another trade. We did one on Netflix. I'd like to go back and review the Netflix trade, and then potentially either scan for a new earnings trade, or based on audience participation, vote on whether you want to do a look at cash secured puts. Cash secured puts is what I consider a reasonable way for someone to start working with options as a strategy to build income and grow a portfolio. And you can slowly start to build a position in stocks, and you first sell the cash secured put, then eventually you'll probably get assigned sooner or later. Once you have the stock, then you sell a covered call. Once you have that in place, if it looks like the market may go down, you might go ahead and sell a put with a covered call, which is known as a collar trade. And eventually, though, you may just have your stock taken away from you if you do a covered call, and then you get to start the whole process over again. That is one cycle of doing an investment type position, or the earnings announcements, which we are now in the middle of earnings season. It's great. Love it. Beautiful ways to get it done. Head face. Yep. Netflix got smacked is what Brett's saying. Brett's saying, I'm scared of undefined risk. And let's see, saying privately. You know, we did this last week as far as making all participants being able to see. Right now, is it grayed out that you're not able to share, or are you just typing privately because you don't want me to share the comments? I need to learn how to assign everybody the ability to share comments. Let's see here. Event info, speaker, microphone, invite and remind, audio, manage panels. Manage panels. Allow participants to change sequence. Yes, that's not it. Come on now. Audio connections, view, synchronize for all. Is that what that is? Event info. Q&A, management, that's not it. Is all panels put on? Can you set the chat so that all that's what I'm trying to figure out. Does anybody know here with, let me pause the recording. No, that's not pausing the recording. with WebEx, how do I allow everybody to see everybody's comments? If anybody knows how to do that with WebEx, go ahead and type that in. In the meantime, I'm going to go ahead and pass allow to annotate, make presenter. See the participants tab above, right? Got it. Yeah, I mean, I've got the participants panel. Let me see here. Okay, there's a little gear. Advanced options. That's for camera control. I don't want to adjust the camera. Polling coordinator. Here, let's do this. I did this last time. I'm just going to go ahead and promote everybody. You're all promoted. Make panelist. Make panelist. You're all panelists. Oh, I almost expelled somebody by mistake. Make panelist. All right. Now, just remember, if you are a panelist now, be careful if you have a microphone active. If you've got some noises in the background, we're all going to hear it. So mute your microphone if you think you're going to have a lot of background noise. Assign privileges to. Okay. All right. So let's get back to it. What I'd like to do now that I've asked everybody to vote, would you rather do investment where we could look for cash secured puts to sell? So we could either do the cash secured put strategy, or we could go ahead and work on another earnings announcement. Go ahead and type in your preference, and then we'll go ahead and take it from there. In the meantime, let's take a quick look at Netflix, which had earnings last Wednesday, and it went ahead and really took a nice drop down to 96.36, came back up to 103. Our previous assumptions were to put on a calendar, and what I'm using is OptionVue here. And where's our Netflix? With OptionVue, I just open up, I've got tabs on the bottom, just like an Excel spreadsheet. I just type in the symbol, and we've been assigned 2,100 shares. How's our trade working out? Well. We have to take a look. We're still long 21 of the 125 puts because we put on a calendar. And so if we were to go back in time, I want to show you what we did with Netflix, but using NetView, going to BackTrader, I can go back to last Wednesday at about 3:30. Actually, let's go back to last week's webinar, 12:30 last week, the 14th of October, 2015. And we were eagerly awaiting Netflix to come out with earnings later in the day. And the volatility chart at that time was interesting, as the volatility had peaked and then came down and was starting to move back up. So it's interesting for those of you who are not aware of how OptionVue works. You've got your matrix, okay? This is the stock, Netflix. You can configure this box. It's a 2x3 grid. So this is the last trading price, the change for the day, up 17 cents. If I'm going to make a potential trade, I could type in that I might want to buy 1,000 shares. So it says plus 1,000. If I wanted to short 1,000, negative 1,000. And that's a potential trade. And we already have a calendar trade on here, shorting 21 of the October 125 puts and buying 21 of week 4 of the 125 puts. Notice now, because I just said short 1,000 of the Netflix common shares, okay, it's combining those trades. Now, the flexibility with OptionVue is amazing because watch this. If I only click right here on Netflix and hit the Analyze tab, it's only going to show me that one potential position that I'm considering, right? Or, notice I unclick that, click on Analyze tab, and now it's got all of those again. Or, notice these 3 buttons here. E means existing trade. T means analyze trades that I'm entertaining, and B is for both. So if I go ahead and click on E, it'll show me the existing trade only. And so this is a calendar trade. I like calendars a lot. They kind of remind me of butterfly trades there. With only 2 legs, I kind of get the same type of a time decay, but a butterfly trade is a little bit more volatility dependent. And so our assumption back then was that Netflix was going to be potentially, the bias was to the upside based on the person in the group who had asked to say, hey, can we analyze Netflix? So 3 weeks ago, we went ahead and started looking at it. The bias back then was that it would be to the upside, and indeed, Netflix did rally going back 3 weeks ago. And we were sitting here inside of this. Notice here on the charts, we have basically an upward trend channel, and we were stuck inside there, and we were hitting support levels. And I was saying it's probably on September 8th, we were going up and down here. October 7th, we were right up around here, and I was saying that if we broke above that line, we could potentially rally higher, or we could break down, which we did. And we've broken the support level here in the last few days. Okay, but going back to last week, and here I'm adding time decay lines. Notice that even, okay, it gave me a warning message. I can have up to five time decay lines in OptionVue, and it's very easy and quick to just add and remove those time decay lines. Back in the old days, the brokers were just giving you hockey sticks at expiration, risk and reward, which is very deceiving. And the idea is that most people will exit a trade before expiration. So you really need to take a look at what's it going to be like in 1 day, 2 days, 3 days from now, let alone at the time of settlement, which is Saturday. Something to be aware of that OptionVue considers settlement day on Saturday. So this, or you could consider this if it's something like Netflix, 4:01 on Friday afternoon. The last trading price at Friday afternoon would be technically your, it should be your settlement price, but anything can happen in a cartoon. Hey, Norman, how are you? I am going to promote you to panelist so that way you can participate. Are you still there? Attendee list, refresh. Yeah, you're still there. I'm going to make you a panelist so that you can type in your comments and everybody can see your comments. All right, so welcome everybody. So the idea is that at that time, on October 17th, we had put on the trade a week earlier where we had sold the spread for about 45 cents. We paid $20.40 for 4 weeks of the 125 puts, which is a bullish position, and we sold, wait a second, by selling the October 125 puts, that's a bullish position in the short run, and by buying the week 4, it's a bearish position, obviously. Buying the put is bearish, selling the put is bullish, costing us the difference between $20.40 in 1995 is 45 cents was the cost of the spread at the time, and it cost us about $991 at that point. And you can see that what happened was from the time that we had purchased it, the value of the puts that we bought went from $20.40 down to $18.20. This is the theoretical price based on OptionVue's pricing models. And so the difference now between $18.20 and $15.09 is $3.11, which was at that time a 554% gain of $5,400. Probably should just go ahead and exit the trade, but this was put on in the simulator account to go ahead and watch what happens. Obviously, it would probably be a good idea to grab that profit. So what happened after the earnings announcement? So with FinViz, if you're not sure about how to get information, FinViz is a nice one-stop shop that's no cost as far as getting some basic charts at no charge, getting all your fundamentals and technicals, earnings date, which is October 14th after the market close. You get your analyst upgrades and downgrades for whatever that's worth. And then you get all the news aggregated. And this is pretty good. I'd say it picks up most of it. And now they've started adding stock twits over here to the side. And then after that, you get all of the inside traders, inside employee directors, CEOs, what they're doing. So it's really it's a good screen if you're new to this, or just it's a good one-shop stop. So October 14th after the market, where did we close? Now I'm using TC2000, but you could use freestockcharts.com, which is the free version of this software. And so you can see, I want to stretch this out. You can see that the earnings came out and we had this huge gap down. And so the bias for Netflix, even though the bias of the person who asked for me to analyze the trade was saying that it would probably go up, and it did go up into earnings. It went ahead and broke not only this level of support here, but it also went ahead and broke this other prior supporting trend line here. So now prior support becomes resistance. Now, when it comes to trading, in my opinion, you need to understand the charts because you must have an idea as to where time, price, and volatility is going. You have time, and we knew that there was an event. It was earnings, right? So we knew it was going to happen on October 14th after the bell. That means that we had a known volatility event within a certain amount of time. So you put those two together, and then you have to figure for price. Price is the unknown variable because we pretty much have, especially when we're using tools such as OptionVue, we actually have, during that point in time, a more accurate tool right before earnings as to what an assumption of where the implied volatility is going to go. We typically get a volatility crush right after earnings. It's one of the few times, 4 times during the year, that you can kind of count on one of your variables to go down, almost guaranteed 100%. After our earnings announcement, you will typically get a volatility crush. So that's where, if we're going to do an earnings trade, which you can go ahead and make a lot of money just being right only a few times out of the year if you wanted to employ earnings trades. And so, again, as a beginner, it's very important that you understand implied volatility if you're going to get involved in options. And if you're going to trade around earnings, you've got to understand where the support and resistance levels are, in my opinion. Now, there are some people that will just go by standard deviations. But what I'm also looking for is I'm also looking for high probability chart patterns, support resistance levels, Fibonacci support and resistance zones, and that when you put them all together, it puts the odds in your favor, and that's really what it's all about. All right, so what happens to the calendar in the front month? Aren't you exposed with only your back month? Correct. Correct. And for demonstration purposes, I've just gone ahead and just moved back into BackTrader and watching how this trade plays out. So let's go back over here. So what happened was, if we were to go ahead and close out that trade before the earnings came out, would have been looking like $1 million, or at least $5,400 anyway. So, but what we are doing here is, and I'm going to get rid of this potential trade of shorting 1,000 shares. Let's go forward in one day. But before I do that, let me go back a step again and show you with OptionVue, you have the volatility chart next to the price chart. If I click on the price chart, notice it's going to bring up not just the price, which is over here, and in fact, what you can see is in BackTrader, it's showing you all the way out to October 14th. Let me take a look at something. July 1st. And July 1st. One of the things also with OptionVue, you want to go ahead and make sure you update your asset files and price charts. So I'm going to go ahead and do that. When you click the NetView Update Price Charts, if I click on this box, it's going to copy the currently selected asset into the box. So I'm not going to update all of my symbols. Go ahead and just have it update. I want to make sure I have everything up to date. And I also want to go ahead and update the asset file itself. But at this point, because I'm in BackTrader, I don't want to overwrite my other data, so I'll keep that all the same. All right. So the volatility, if I only hit the volatility chart without the price, this is all we'll get. You take a look down here in the bottom left, and you've got a V and an M here. And notice it says display historical and implied volatility. And so it'll show you for 3 weeks, 6 weeks, 10 weeks, 1.5 years, 3 years, 4.5, 6 years, what the statistical and implied volatility normally is. And at this point right here, if we're just looking at an earnings trade, we're only looking at the next 3 weeks. Notice the window pops up over here. So you have the implied volatility on average about 80. And right now we are at right there, 78. So it's within range for that. However, notice right here the implied volatility inside the bracket overall for Netflix, which summarizes all of the strikes, says that we're in the 96th percentile ranking, saying that only 4% of the time on this chart right here, only 4% of the time has the implied volatility been higher. So again, because this is a beginner's room, the concept is that if options are expensive, you want to technically think about selling them. That's why calendars are potentially good candidates or good strategies around earnings. All right, so let's move forward one day. Notice 109.91. That was at Wednesday in the middle of the day at 12:30. Let's shift that over to 12:30 the next day. And in the interest of time, I'm not going to go all the way back and step through 9:30. We'll just see what happens after most of that volatility should have come out. So now we're trading at 101. We're down $8.46. Okay. If we go ahead and look at the volatility chart, you can see already that we're down to the 59 percentile ranking. We dropped from 96 down to 59. So if you take anything away from today's presentation, what I'm proving to you here is that most of the time, 99.x% of the time, after earnings, implied volatility will drop. And so, and where's it going to drop to? Most likely the previous areas. And that's exactly in the middle of the day. Notice it's already dropped down to right about this range right here, 56, 47. Where are we at right here? Notice when I click on the chart, it gives me the number 51. This is important to understand, especially if you're going to use OptionVue, because with OptionVue, if I go to Trade Finder, I can type in a symbol, and I can type in a price. If I hit this box, it brings in the current price. I can click in a time, saying a T plus 1 day would be October 16th in this case, because we're in BackTrader. Or I can even go minus. I can go T minus 7 days. This will probably give me an error because I'm trying to calculate into the future. But if I'm using BackTrader, I could type T minus 7 to give me previous week. Okay, I shouldn't have done that. Okay. All right, so it's updating, it's going backwards. So that's an example of how to quickly go back and forward in time using the T today plus or minus the number of days you want to go forward or backwards. So let's go back over to Thursday the 15th at 12:30. And so here, this is what I was getting at, the implied volatility box. So we were at, on the implied volatility, we were up over here at about 83. you could make the assumption when you're looking for trades, you're going to drop into at least the 50 range. So when you're using Trade Finder, you would plug in that you're expecting about a 30% drop in volatility. And I believe that when I put this trade on about 3 weeks ago, that's about the number that we put in. If I had time, I'd go back over to the video, which you can go out on YouTube. By the way, this is a good time to highlight the fact that Tom on Capital Discussions done a great job of putting all this together. If you go ahead, you can find my name here, Jerry Furst. Hit refresh, and all of the recorded events are over here. As long as I hit the record button and Tom promotes it up, you can go ahead and click on, if you wanted to watch it over in MP3 for WebEx, you can click on that, or if you just click on the date right here, it'll bring you back over to YouTube. And we're looking for potential volunteers. If you'd want to go ahead and potentially help annotate as I do the presentation, what are the different topics I'm talking about? It'll help me and obviously the viewers. What are the different things that I'm talking about? So far, I'm looking at charts discussing earnings versus selling cash-secured puts, highlighting how to use OptionVue and BackTrader. So if somebody would be nice enough to maybe annotate or record what's taking place, I can go ahead and update the notes so that way others will be able to take more advantage of it, and it will be simpler to follow. So anyway, this is the so that's the recording from previous week. Okay, stop. Okay, now, so what I also just went ahead and showed you guys is that you can just go out to Capital Discussions, hit the library, click on my name or anybody else's name that you want to follow, hit the refresh button, and it filters out just that presenter. All right, now, any questions so far? Brett's asking, am I looking for just an outline of the webinar? Yeah, kind of like the main topic points in a way, as far as, because I never know what I'm going to talk about. And you got to catch me sometimes. I can go down rabbit holes. I will entertain most questions. So if, you know, Tom does a great job. I was doing the week ahead webinars, and Tom does a great job of, here you can see market analysis and week ahead with Jerry Furst from Traders Education Network. And Jim Riggio was there, and the discussion revolved around big moves up and down, price patterns, Fibonacci's, and risk management. So that's a nice little synopsis. So yeah, if I would probably get more detailed, but that's another story. But thank you, Brett, if you're volunteering. My contact information, by the way, in fact, I'll bring up on the PowerPoint here, is down here on the bottom of this slide here, jerrybfurst@yahoo.com is my direct email address, jerrybfurst@yahoo.com. And feel free to contact me if you have any questions, or if you're interested in coaching, mentoring, training on OptionVue, or just want to chat about the markets and trading. Let's see. So, what happened with OptionVue? It looked like it was trying to update. All right, let's go ahead and cancel OptionVue and come back in. OptionVue's had a couple of issues lately. When it's working, though, it's like indispensable for me at this point as far as doing options analysis, modeling, and comparing different types of trades to figure out which one is best. So nothing's perfect, and I would say that the pluses of using OptionVue far outweigh any of the bugs that occasionally come up when Yates constantly trying to update the software. Okay, so going back to Netflix, if we go back over here to stocks, one of the things with OptionVue, if I right mouse click underneath a column, it'll sort it by that column. So notice these are all sorted alphabetically right now, and I can quickly find my duplicates and just hit the delete button, and I can quickly get rid of my duplicates. And also take a look here. I've got earning date up here in the column. If I click on a column header, right mouse click, I have all these different columns I can add. And right now we're going to leave it at earning dates. Notice though it's very sensitive, so it just put it on alerts. So I go back, hit earning date. There's earning date. Notice if I right mouse click, it's going to sort. And so I can very quickly sort on a watch list what my earning dates after market close, before market open. So it also gives me something very valuable, which is DVO. So the dollar volume of options. Basically, I just check to make sure that we've got open interest. If I see something like a 4 or a 0, I know that I'm just not working with those. The CACQ, for example, Caesar's acquisitions, I think they were acquired, and so I just hit delete. So, all right, right mouse click on symbol. I'm going down to Netflix, which isn't there, so I'll just type on top of anything NFLX. I thought Netflix was there. There it is. All right, so we're bringing the matrix back up. This is current price, trading at 98.80, down 19 cents. Let's take a look as long as we're here. What is the current trade looking like? Notice here I have this drop-down box. It has accounts. I can go ahead and add all kinds of accounts. So I can easily go ahead and do simulated trades and also manage other portfolios. And so I know that in the Simulator 2 account, I went ahead and put in this trade. And so if I hit the Analyze button, you can see that currently, because I just let the trade sit in the simulator account, we got assigned 2,100 contracts, but we're long 21 of the week 4 puts. So what would happen if I go ahead and just isolate only, just by hitting in the column, notice the column header, and by using the control button, I can highlight multiple columns. Okay, so if I just highlight that one column, I'm only analyzing this side of the trade where I'm long 21 of the 125 puts, and I had purchased them at $20.40. Remember, the spread cost us 45 cents. They're currently trading at $26. We have a $12,000 gain here on this leg of that calendar that I did not close and did not cover the other side as we went into the earnings. So we've got the 2,100 shares. If I only isolate that, you can see that we're down quite a lot of money, $56,000 of margin. The profit and loss is over here. The margin maintenance requirement for that trade now became $116,000. So we are in the beginner's room. So I need to highlight, it's nice to talk about trading and making money. Okay, a lot of people often don't want to talk about the pain, sometimes severe pain. So a second major takeaway from here, if you are a beginner, is realize that you don't want to play around and ignore options, you know. If you're putting on a calendar trade such as the one that I did and just let it run, notice that the combined trade, look at the power of the options. The maintenance requirement for shorting those, for buying the Netflix common required that I had $116,000 in the account. If you're trading with a $10,000 play account, you got a margin call, and you're down quite a lot of money. But notice that because we have a spread on, we're not quite down that much, only $42,500. Okay, so the idea was we had 21 contracts on that trade, which is 2,100 shares. Okay, now if you've got a lot of money and you are happy to go ahead and pick up 2,100 shares because you've got $1 million and you're looking to build a position in Netflix, you don't worry about this. You're happy. You're buying. You've purchased the stock. This goes into the cash secured put scenario. If you did your homework and everything else, you're okay with it. You're not sweating bullets, even if you are down a significant amount of money. The idea is if you are turning this into a investment, different ways. Excuse me. Hold on a second. I gotta clear my throat. There are ways around trading around earnings where you could be taking a initial or adding to a position. Options give you options. When we're looking at the markets, we should probably take a look at, let's take a look at a lot of people looking at the Russell, right? I know a lot of people here in this room in capital discussions like trading with the Russell. So a few weeks back, August 24th, we were down over 1,000 points on the Dow. And you can see right here, we put in, even October 2nd, we went ahead and put in a little bit of a low here on the Russell. So we're actually breaking lower lows to talk about the broader market in general. I want to go ahead and show you, excuse me, I'll get a cleaner chart here. That what we have here, one of my more favorite type of chart patterns, it looks to me as if we're building a shoulder, a head, and we're rallying up. Notice this support line here, support and resistance line. We're rallying back up, and I'm saying to a lot of people who are following my analysis that it's very possible that we could be rallying and stagnating in through the end of the year. But I'm very, very much aware of the fact, projecting into the future price and time, that we could be setting up for a head and shoulder pattern. And so that's one of the things that I'm watching for. We have a very strong support and resistance level right about here. Got to excuse my spaghetti lines here. Right here, if I was to highlight that, strong support. All right, so the idea is that potentially we've had, some people would consider a pullback in the market where it's a potential buying opportunity by the dip. So some people might be happy to pick up Netflix at these prices, expecting Netflix to rally from here. So it's all based on your personal assumptions, your strategies, and your outlooks, as well as your analysis. So let's go ahead and if we, this is the current trade, If we were to go back in time, back to the 14th, as we were looking at earlier, 12:30. Notice we're still in the position. We have a little bit of a profit. We had put this trade on for $991 3 weeks ago. No, 2 weeks ago. 2 weeks. This is the third week. 2 weeks ago, we put on the trade just under $1,000 for round numbers. Last week, the earnings came out, and we're looking at the day before. Notice that if we wanted to, we could go ahead and collect $642, giving us about a 64% gain, and we could close that trade out. Notice that the good thing about this calculator, which is, again, the interface on OptionVue is just very, very nice, because with just 1 or 2 clicks, I have this calculator. The calculator is telling me that, okay, today's date, current price, no change in volatility. The options that we sold that are going to expire in 2 days, we sold 21 of the October 125s at $19.95, are now theoretically worth about $17. So we have the option of just closing the whole trade out, or we can start to morph this trade into something else. Okay, so geez, it's almost 1 o'clock. And so this is a, a post-mortem. If we wanted to, I could go ahead and just, we could go ahead and just close this trade. And the way that we close that on OptionVue, notice if I click this box here where it says Legend, look over here on the right, and as I click where it says Legend, that will come up and show up or allow you to see the data inside the matrix. Notice that this box here says Trade. The one underneath that is Existing Position. So here's the existing position where we're short 21 contracts plus 21 contracts. This is the date. This is the October 17th expiration. Again, this is Saturday, so technically it's October 16th. Inside the 2 brackets is the days to expiration. It says 3 days, but that's Saturday. It's really 2 days to expiration. This one has 10 days to expiration, October 24th, which is this Friday. But what we can do, just to go ahead and make this a winner, we have the benefit of BackTrader and 20/20 vision. So I can go ahead and just put in the closing position, hit Convert Trades over here. And now we don't have any position to trade, to analyze. I can go to the trade log. I can go ahead and if I have to modify what OptionVue had, let's say that, here I'm going to get rid of the Netflix assignment because that shows that that was assigned. But now it's showing here at 12:30. Let's say that we really were closed out at $17.06. And closing this leg of the trade was, let's say, $17.83. It's good to keep it accurate so it matches up in your brokerage accounts and also for other reporting purposes. And now if I wanted to go to the reporting section of OptionVue, I click on reporting and I can go ahead and I could just notice it defaults here from October 14th to the 21st. If I went ahead and says give me from January 1st, you can see all these trades, unrealized trades, combined. There's a lot of different trades in here. But I can go ahead and say, just show me all of my Netflix trades going back to January 1 of 2013. And you can see here is our most recent trade, opened on October 7th, closed on the 14th for a $579 gain. opened with $991. The opening price of the trade was 45 cents. Closing was 77. Okay, so that's a postmortem on Netflix. Okay, I've taken a lot of time going through that. Thank you, Brett. Yes. Brett's also saying the 116,000 down is on one leg of the spread. Correct. Correct. That's on the, it's not so much that it's not down 116,000. That's the margin requirements to have the 2,100 shares of Netflix. So that's like the margin maintenance requirement for the position. So that's a good question to go through. I can just, if you wanted to go ahead and see, I can just go back in time, like an extra hour, just to go back and highlight that. Notice the position shows back up. I hit the Analyze button. Insufficient price information. Get out of here. Here we go. So we're back there. Notice right now the maintenance is the bottom line. $991 is how much it cost us to get into the trade. Because when I use Trade Finder, it has, what are my goals? I'm saying just for round numbers, some of us have a couple of $1 million to trade and play with, and some of us just are learning. This is a beginner's room. So I just use an even $1,000, so you can easily move up and down, adding zeros or taking zeros away. So when I'm looking for trades, hopefully we'll get to that in a minute. So what I'm saying is, if I close this, I want to show you one more time this leg of the trade where I am long 21 contracts. But okay, I'm going off on a tangent. Bottom line is that's the maintenance requirement. Right. Okay, good. All right, so I'm going to go out of back trader mode. It's going to give me a warning. It's going to say, am I sure I want to make those changes? And it did. Okay. One of the things that I'm always looking for with OptionVue, especially, you need to make sure that your data is good and up to date. Notice the time column. Time column shows the current time, 12:58, 12:57. That's the last tick that was updated. Okay, so you want to make sure that that's current data. I'm always glancing at that. The globe needs to be turning. Notice the little dot there, turning around. That tells me that we're live and rolling. Let me show you a couple of ways that I scan for earnings trades. With FinViz, I can scan for earnings by going to my screener, and I've actually got a preset where I can say, show me earnings taking place tomorrow. And it shows me 105 total. And it shows me my presets. Again, this is finviz.com. I log in. There's no cost for this service at this point. And I can go ahead and filter, and I'm saying earnings date is tomorrow. Here are my parameters. Where there's going to be tomorrow, yesterday, next 5 days, next week, this month, or I can do a custom. Notice it says elite only. So if I want to pay for some extra bells and whistles, I can put a date filter on there. So in this case, I can say tomorrow, optionable trades, average volumes over 300,000 shares a day, and prices over 20. It's given me 105 results, so I want to narrow that down. Let me go ahead and say, give me stocks over $50. Now we're down to 56. And look at over here, the average true range. I'm going to go ahead and say I like to see some average true range movement of over 2 points per day. So I'm down to 25. And this is just for options, optionable stocks having earnings tomorrow. Let me say I want average volume over 2 million shares per day. Now I'm down to 7 stocks. So who do we have? Amazon, both Googles, Lilly, 3M, Royal Caribbean, and Under Armour. So I've narrowed it down to 7 potential candidates as far as earnings go. I go to charts, and I can quickly take a look at what they, a snapshot of what the charts are for these 7 stocks. Which one looks interesting? Google, okay. Very interesting pattern. Notice we filled the gap. Gap patterns are amazing. They kind of fill. Notice this gap here went up, it filled it, and then continued on its way to the upside. Notice this little gap here got filled right there. It's gap strategy is something not to ignore. Okay, FinViz says October 22nd after the market close. So that's one way to scan for high volume earnings trades that could happen tomorrow. Let me show you also another way that I can scan for earnings trades. I can go ahead into OptionVue. I can go to earnings search, and this is part of the basic package. You don't have to pay extra for this module. And come on now. It's got a couple of nice filters. Earnings coming out within the next day. And I can go ahead and say select all option stocks, exclude options that are priced less than 20. So in this case, I can say less than $100. And I can say make sure that the dollar volume of the options is not less than, I'm going to say here, 2,000. And so we've got one stock selected. Let's see which one it is. Well, if I go over here to earnings scan, and I'm going to go ahead and delete this whole group. Okay, so I've just clicked on this tab on the bottom here of the matrix. I go ahead and click on earnings, hit my earnings search. Let's go back and make this 200. There's 6 stocks right here. Out of all of these having earnings, notice I'm going to say insert, integer overflow. Well, that's not good, Len. Hey, Mr. Len Yates, we got an integer overflow. Okay. What would be causing that? Let me see what happens if I try this. Okay. All right, let's try this. I'm going to close that. I'll just close OptionVue and open it back up again. Let's reboot. Again, like I said, there may be a couple of bugs, but it's worth putting up with from my perspective. So I'm going to go ahead and go back over here to earnings search, insert, and it just went ahead and plugged them in right here. And I put that into my main tab right here. So it's got Alliance Data Systems, Core Labs, McDonald's, 3M, Perigo, and Raytheon. Okay. Notice the dollar volume of options is good. And if I wanted to, I could click on price chart. And I should be able to go ahead and scroll through each one of these that was just selected. And I can go ahead and look for potential patterns. So here's 3M mimicking the Dow. We also have this same pattern, the potential head and shoulder pattern. 3M is it's a proxy high beta for the Dow. Beta meaning correlated to the index. And so if I wanted to, let's say that on 3M, we got earnings coming out. One of the other things that I'll look at is I'll go over to trade and I'll type in 3M. Earnings is coming out. We're expecting, according to them, a market maker move of about $3.80. For those of you who are not familiar with Thinkorswim, you can get yourself a free demo account, I believe. But otherwise, the other good thing here is that they'll show you over in the option chains the implied volatility. Notice the crush. The implied volatility is going to drop from 39 to 25 in the next 2 days. So again, this is kind of like, you know, mad money, lottery money. You want to bet on 3M. It's a nice stable blue chip stock. Can you make money with about a $4 move? I'd say so. So if I look at the chart a little more closely, and I can already see that I've got resistance up here at about 156. So what's 4 and 151, 155? So that's close, 156. Notice right here we're trading at 151. And what's the plus or minus 4 would be 148 or so. 147. So we have a Fibonacci cluster zone right here at about 143. So I've got 143 on my chart, okay, just eyeballing this. Okay, I'm just eyeballing my charting and technicals. For those of you who want to learn more about charting and technicals, again, contact me over at jerrybfurst@yahoo.com. Been doing this stuff for a long time and working with OptionVue since 2003. Doing webinars from the very beginning of webinars. So be happy to go ahead and talk to you. The idea here is we're going to run over a little bit of time. We're just over a 1 hour mark here on the recording, but we're going to run a little bit over. So the idea here is that we have a plus or minus 5-point range, 4-point range according to Thinkorswim. It's a blue chip stock, 3M. It's not going to hurt you probably. This is not a recommendation. All of this is strictly for educational purposes. Okay, but if you were going to put on a trade in the long run, it probably wouldn't hurt to own 3M. However, if you don't have enough money in your account, be careful. I just went over the example where if you just put on an option trade and walk away, you can end up with margin calls and other requirement issues. So never fall asleep on a trade. All right. So using OptionVue, I can go ahead and say that 3M, are we going to bounce up or down? I'm going to go ahead and put the bias to the upside right now. Money's cheap. The market seems to be just, you know, for whatever reason, it's going to go, for whatever reason. I'm just saying 3M to the upside just because. Okay, it's just for demonstration purposes. So I'm going to go over here to OptionVue. I'm going to go ahead and open up the matrix. I'm going to make sure I update my asset, update the asset file, and I'm only going to update it on 3M. And I'm clicking this for the price chart and for the actual matrix. So I update that. And I'm going to maximize my matrix. And notice that here we have what's called a 1/6 matrix. You can see the market price of the current option strikes, the theoretical price. The difference between the market price and theoretical price is something I'm always looking at because I want to make sure that these options are priced properly. And if they get too far out of whack, notice the puts are out of whack a little bit here. And there's a decent difference, not really much. It's really a spread, 13 cents, 31 cents. There's a little bit of a difference between the market mid-price versus theoretical. But we have earnings coming out, so that's okay. It's within range. I'm looking for really bad differences, over 50 cents to $1 difference. So anyway, but look at this. I've got 1, 2, 3 for different matrix formats. Okay, so I'm going to click on that 3, and here's my more data-dependent matrix where I have the bid-ask right here. This is current prices. We're trading at 151 for argument's sake, up $1.85 before earnings. And so we're trading at 5-point increments. The spreads are relatively good. 350 by 365, a 15-cent spread before earnings is not out of the question. 20-cent spread, 410 by 430. I can live with that. And for demonstration purposes, I'm going to go into Trade Finder. I'm going to hit the asset. I'm going to hit this box. It puts 3M in there. The target, I'm going to say, what's the current price? And it's 151 plus 5 is 156 is what I'm saying. The date is going to be tomorrow. Today plus 1 is tomorrow, October 22nd. Now, the volatility chart. Notice the implied volatility percentile ranking is 64, and we're currently at 18.8. I want to make sure that what's the average? We're really right there. We're only about 3 points above the average range, kind of. Notice if I put my cursor right here, we're at about 13.6, where we're in the 8th percentile ranking. Currently, we're at the 64. 3M is really, it's a good beginner's stock. If you're going to start trading and investing with options and getting into the game, working within the Dow 30 is always it's not a bad idea. You don't want to jump into the waters and play with Solar City and Tesla and Chipotle Mexican Grill and Google right away, unless if you're really prepared or if you're working with somebody who's guiding you, helping you. So anyway, I'm expecting really not much of a drop in implied volatility, maybe from 19 here, where we're at now at 18.8. See that down there on the bottom? And yeah, Mark, I do want to, if you want to hang in there, Mark Alpers is volunteering to go ahead and show how to enter an OCO order, which is called an order cancels order. I know we're running over a few minutes, but give me just a couple of minutes more, Mark, and then I want to make you the presenter. And if you think you can cover an OCO, or do you want to do that next time, you can type that in. But basically here I'm showing you a feature of OptionVue that I just think is amazing. So we're going to go down from 18.8, I'm going to say down to about 12. So 18 to 12, 6. I'm going to go ahead and say on Trade Finder, we're going to have a minus 5% volatility crush. And on 3M, that's saying something. And we're going to do that tomorrow morning. My goal is you putting $1,000 at risk. My filter is that I want to make sure that I have some open interest, at least 10 open interest contracts. That shouldn't be hard on 3M, but for some other stocks, yes. So I'm going to put $1,000 in there, and I'm going to say just show me the long option, the calls in this case. And so I've got it sorted by best case scenario right here. And you can see right here, best case scenario says that I could buy 8 of the 155 calls for $1.23. And if I click the Analyze button, that's what the risk-reward chart looks like. And you can see that trade right here. Long 8 November 155 calls. And I can add more time decay lines. But my assumption is for October 22nd, so it's only showing me those 2 days, today and tomorrow, saying that if we were to go up to 155, 156, using $984 on this trade, we'd make a little over $1,000, $1,100, okay? Now, if I go back over here, my next best case scenario, I'd make about $850 using 28 cents. Now look at the difference. I can use $1.23 and buy 8 of the 155 calls, or, and that's in November, or I could buy for 28 cents the 160 November. And here's where OptionVue really comes in. With one time decay line, October 22nd, tomorrow, I can go ahead and hit the superimpose button. And I can very quickly see which trade is probably going to give me a higher reward or a higher risk. And depending upon how I feel about it, which one do I want to do? I don't think 3M is going to really fly to the moon. If it gets a 4 or 5 point move, it's going to be big news. It's going to be also a market bellwether as far as are we in recessionary, depressionary, industrial times or not. It's one of the few industrials in the Dow Jones Industrials. And notice we're going to have a little less risk with this one here. I can click on that one trade, and notice if I click on that line, it'll say that this is the 8 155 calls for $1.23. If, let's say, it goes down 5 points, okay, it's going to be, well, from 151 to 146, it's going to be about the same. I want to lose just about the same amount. Okay, so in that case, maybe it would make more sense to just put on a smaller position of the November 160 calls. Okay. Now I could also go ahead and compare these other trades as well by just hitting the Analyze button on all these trades and then superimposing them, and then I can just quickly see that this one right here seems to give me, at this solid line, that's my assumption as to where price is going to go, around 156. This one has the best risk, best reward, and the risk is also within range of the other ones. So again, which one is that? The November 155 calls. So if I go back over to the matrix, the November 155 calls, I can send the trade to the matrix by pushing the send button, or I can go ahead and just double click it, and it puts it automatically inside my trade box. Okay, so now I'm analyzing the actual trade all the way out to expiration, and there's your familiar, what do you call it, hockey stick at expiration, which is almost worthless to any professional option trader. So if we go ahead and put in the time decay lines, the idea is to get out of this trade and for demonstration purposes, first thing in the morning. And we can go ahead, notice it says minus 3.6 volatility change here. I'm going to say no, minus 5%, just to try to keep it clean. And maximum projected date is going to be tomorrow. And there it is. So there's the only 2 time decay lines. So now if I hit this D button down here, I can go ahead and play with this and say, if we go up to 156 tomorrow morning, risking $998 on these 8 November 155 calls at $1.23, they should be worth theoretically about $2.70, giving me about an $1,149 gain, which is a 115% gain in less than 24 hours. So, how does that look? Commission costs are lower with the blue line. Right. And commissions and transaction costs definitely add up. So it is definitely something to pay attention to. I was thinking that for 28 cents, you don't have to spend as much if you wanted to just, this is kind of a lottery ticket type thing. I'm talking about 3M with a couple of hours before the close. It's just a roll of the dice, not to mention that 3M's had a good day today too. So, so now I think that even though it's about 120, Mark was volunteering to go ahead and show how to put in an order cancels order. And so one of the interesting things about this calculator here is that, okay, of course we all want to look at how much money we could make if we're right. 115% gain. Usually if you're going to get filled when the volatility is coming out, you could put in one order that says, let me go ahead and say, if we already put in the order, we bought 8 of these at $1.23, we could put in one order which says close, okay, buy to close at $2.70, and that would give us about the 115% gain. Or there's another trade that could be at a loss, right? Well, what happens if we're wrong? What happens if we're wrong and it goes down instead of up to 156, let's say it goes down to 147. Remember, these are the Novembers. Well, we're going to be in trouble. It's going to be worth about 12 cents. So we've lost almost the entire trade if that's what happens. You have a decision to make. Do you want to hold on and hope it rebounds? This is when you start to say, well, maybe I should have put a spread on. Maybe I should have sold one and bought the other. So let's see for fun, if 149, at 30 cents, we still have about $200 left. So notice how quickly I can go ahead and say, okay, let's say it only goes down a few points, 149. It'll be worth about 30 cents based on this calculator, the theoretical value. So I can go ahead and put on a different order, say buy to close at 30 cents if 3M is less than 149. And that's important because and you want to do that for just a one-day order and double check it. The idea being that you can have, like any trade, potentially orders could get picked up at 30 cents and then rally back up. You never know what happens with market makers and order execution. So if you are going to have a standing stop loss order, I prefer to have stop win orders. I prefer to put in my order, especially on earnings, to say I'm going to buy to close at $2.70 because right at the open at 9:30 or 9:35, there's a chance we could spike to 270 because the market makers have to close the trade. And if you're the only guy with 8 contracts on the November 155 and somebody has to open or close that position there, if 270 is the only real bid, boom, you might get filled. And I've seen it happen time and time again. That's at a profit. Having a stop loss as a order cancels order on earnings is probably something I'd be watching it. I'd be watching it like a hawk at 9:30. So, having said that, we are now at the 124 mark. We've gone over an hour by a few minutes, and Mark has volunteered to potentially take the screen and show how to do an order cancels order. Or do you want to go ahead and do that next week, Mark? While Mark types that in, I want to go ahead and thank you for joining if in case we're going to close up. My website is Traders Education Network. I'm going to have a meeting in South Florida next Tuesday at 7 p.m. in Delray Beach, Florida. It was scheduled for Wednesday, but Donald Trump has forced me to change the date because we got the Republican debate on Wednesday. Next time's fine. I agree with Jerry. Would never do this on an earnings trade. Right. So the as far as order cancels orders, it's good to learn how to put in an OCO, order cancels order trade, and I think it's right to go ahead and just put in a next time. And we'll cover that. We'll give you more time to actually display that and do a presentation on Thinkorswim's order cancel order. It's actually quite elaborate. So if you're interested in private coaching and mentoring or a 30-day trial of OptionVue, before you go out to OptionVue directly, talk to me, because rather than go out and buying the software initially before you know how to use it, you can see I've been using it now for over 10 years. I know it inside and out, and rather than get locked into a one-year contract, you can go ahead and I can teach you charting and technicals. I can teach you strategies, and you can rent my brain and OptionVue technically as a way of learning. And then once you learn how to use the software, then by all means, absolutely, go ahead and buy OptionVue. If you already know how to use OptionVue, if you already bought it, some other coaching and mentoring, it might be something you're interested in. My website, again, Traders Education Network, and jerrybfurst@yahoo.com down here on the bottom of the slide. There's my email address. If anybody wants to volunteer to summarize, there's my address. If anybody wants to summarize some of the stuff that I've covered, we went over the Netflix trade, we went over BackTrader, and we did a very, very quick scan for earnings coming out tomorrow. And what I want to do is I'm going to actually go ahead and put this trade in the bag. Where's the 3M? Inside the simulator, I'm going to hit the convert trade. So we're up $1.16, and next week, October 28th, we will go ahead and come back and take a look and see what happened tomorrow. Which, by the way, we're going to go into the future and back in time. For those of you who may not be aware, today is actually, if we go to Google, I just saw this on TV, if you're not aware. Back to the Future, today is the date, October 21st, 2015. That is the day that Marty was going to. See that? October 21st, 2015, Back to the Future. I bet you didn't. How many of you, if you didn't see it on TV like me, how would you know? Amazing. From 1985 to 2015, here we are. And so next week we'll go not only back to the future, we'll go back to the past of 1 week, all with BackTrader and OptionVue, looking at 3M in the markets. And there you are. Brett, thank you very, very much. Much appreciated to type in a summary. Anybody else wants to volunteer to do a presentation, chime in, and if you have any other suggestions for topics, as I'm saying, earnings, I think is pretty cool to work on, and cash secured puts as a beginner's presentation, I think is a good way to go. And so there you are. Back to the Future. Wednesday, October 21st, 2015. It is now 1:30. My name is Jerry Furst, founder and director of Investors Education Network, broadcasting here to you live on capitaldiscussions.com. And we'll see you again next week. Over and out.